Good evening. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for a very interesting trading day on this Thursday, and it is the 19th of May, 2022, just getting on to 7 p.m. Central Time. Well, the markets are closed, but what a battleground today. Anytime you turned around with the SPY, the QQQ, the IWM, any of them you were looking at, they were up, they were down, they were sideways. Which way were they going to go? Traders were confused, to say the least, trying to get things going. The problem is, even if you get going, it's a bear market. And bear markets do get rallies. Don't kid yourself. They get rallies. They don't last really long. That's the difference of them. What's going to change here? We're already at the 19th. You're getting closer to your June 50 basis point hike. The market will get all nervous about that. What's it going to do? You'll hear, oh, it's shutting down housing. Those interest rates, they're going to hurt business, blah, 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 blah. The news is not going to be bullish. And if you're looking at the daily economic data, it isn't bullish. Okay? You ever heard of the company Kohl's? Walmart? I can go on and on. Target? They're all getting hit, all right? Those are your retailers. They're not in great shape. There are some companies that'll do better. Don't kid yourself. There will be. In fact, one of them has been SoFi. Look at how it's come up recently. All right, we've talked about that. I picked this one because it looked to me like it wanted to lift a little bit. You've done that. You have a pattern of higher lows, higher highs. You're well off these lows. By the way, if you looked at Rivian, the one that we covered the week before, and I was saying, I thought traders would show up at about 20 bucks. Well, it's 30 now, so that's not a bad play. But this market should run into some resistance. Where? Well, it's way up here, or it's the Bollinger Band. You're in it. So now you're at that resistance point. So it's something to be watching. But the market out of its downtrend, and it goes back to neutral if you take out 680. Could the market make a run for $10? Of course it could. Why not? But staying over a Bollinger Band now, it won't do that. It would have to push the band up, and this is just not that kind of pattern that typically does that. I'm not saying it can't, but it typically doesn't. You're in overbought territory already, and the market has made a nice run. AMC, well off the lows that we talked here, and I felt vindicated when yesterday you got back to the 18-day average, and this is where the first resistance is going to be seen in it. I'm going to repeat myself over and over. Money's going to come into the theaters now. The kids are going to get out of school. You got the blockbuster movies. It'll last 60 to 90 days, and then they got a problem. Then it's back to the business model that really doesn't work. In Apple's getting beat up because they don't have product, okay? It's really that simple. It's not that people don't like their product. It's not that they didn't come out today and show you AR headset. Did you hear about that? The board of directors got to see a piece of new hardware. What's it going to do? How was the response? It was wonderfully bullish. You were down 2.4%. Okay, normally you'd hear there's a piece of hardware, it's good, this is what we want to see, it's the next revolution for a form of artificial intelligence. It had nothing on the marketplace. Okay, but you're at the Bollinger Band. It's not going to be easy to push through that. You'll work your way pushing on it. Disney didn't go anywhere, all right? It's still stuck. You get these little bounces. These are bear markets. Now, do you honestly think Disney's not going to do well this summer? I think they're going to do gangbusters. They're also going to come out with other products. I'm already reading about the new Disney, not channel, but the way they're going to give you an ad base for their streaming content. I think these are all good pieces of news. But the weight of the market on this market in bear markets overcomes most things. XLF, the financial sector, bear market rally that again failed. All right, I'm not saying it's throwing out sell signals, but these are false buy signals to go anywhere. We take XLI. Here's a market. Getting your embedded reading, you lose it. You're probably going towards the 18-day average of closes. But that's all. The first challenge generally doesn't take you anywhere. You don't go from this type of move all the way up through the moon. I mean, could it happen? Of course it could happen. It would take some crazy piece of news. They discovered the holy grail of something. I don't know. but I don't see that. Maybe the Fed would just say, hey, we've changed our mind. We're going to start cutting interest rates. I mean, anything's possible, but probable? I doubt it. XSD. You're fighting a battle for footing now in the semiconductor area. It's no longer as bearish as it was. That's evident on the chart. It just hasn't thrown out any sustainable buy signals. You got back again. The last break low here was 169.18. Today you got to 168.66, so you took out that low. You were trying to hold an uptrend, you failed again. So now it's more of the meandering back and forth, but it's not in the collapse status either, and I don't think it's going to stay there. The reason is, as China comes out of the COVID, their zero tolerance, you're going to want the semiconductors. You're going to start building everything from refrigerators again to automobiles to computers to handheld phones. You're going to need these semiconductor plays, and there'll be demand for them. But you got to first get out of this lockdown. You're not there. They just opened grocery stores in parts of Shanghai today. It's been all over the news. But to get there, your coffee shops, your tea shops, they're not open. It's just that. It's very limited. Buy your bare necessities, go home. So they're not fully open yet. In the home builders, if you look at what's going on, the homes that are selling, and there are homes that are selling like hotcakes, but you have to be over the $1 million home. And you have to get buyers that aren't really worried about what mortgages are. They have the cash from the stock market. It's time to put it to work somewhere else, because each day that it goes down, it's a problem. I read today a report from JP Morgan, and for every dollar of wealth that is lost in the market, they believe that spending drops 1 to 3%. So for each buck, you lose a penny of your spending, or 3 cents. That's interesting. So if the market goes down 20%, that's a hell of a lot less you're spending. And it makes sense. The logic of it is all there, because not all of us have unlimited funds. And you're sitting there and you're going, do we really need to buy that? Food's costing me more. We want to go on this small vacation, but I got to tell you, we can only spend on so much. Everything's going up around me. I don't think we can do that. That's the story that goes on. And that was the point they're making, and I agree with them. But when it comes to housing, you have two different ends. If you got a $3 million home, they're moving like that. The guy that can buy it, he's not going for a mortgage. The home that's $500,000, $700,000, he still needs people with mortgages. That's the market. XLE. So you've got a market that went up to the Bollinger Band, backing off, but energy's not bearish. It's in need of a correction, and that's what it's trying to do. You can see the momentum. It didn't lock in and embed. Hasn't done that, period. You've made these highs and you've backed off, and the Bollinger Band areas have contained the market. Let it do its thing, but there's nothing bearish on the energy side here, long-term or short-term. They're overbought in the short term. That's the problem that this market's having. GLD, we just spoke yesterday, and I said, you're still embedded, but I told you what the futures were doing. I said they'd already come alive. The futures lead this. This is made up of the futures contract. They close this at 3 o'clock. The futures reopen at 5 at night. So I'm looking at the futures at 7 at night or 6:30 when I'm telling you I already know what they've done and how this should react. And if it got through this number right here, 170.53, it should be enough to make you maybe lose the embedded reading. And bingo. So you hit the first objective. I think it's going to make a run for the 173.24. And if it can close over this, could we finally get a rally of duration? I don't know. But it's no longer bearish. That I know. GDX. Well, if gold's going up, why do you want to be short this? And this threw out the signals earlier than even that. Right here was your signal. You can't be short anymore. That was the day. And then the market's coming up. I think you'll be into this resistance. Lickety split. Copper. One of my favorites. And when we were back over here and you lost the embedded reading, what did I say? This day. Go to the tapes. They're out there. These aren't trade recommendations. They're observations. I want to make something clear. I stand by my recs that I make in my morning subscriber videos. And as this market was doing this, I said, unless you lose that embedded reading immediately, the odds are you're going to go up and challenge these main moving averages. Tell me that didn't happen. Okay, so I feel pretty good about that stuff. When I look at TLT, neutral. I know a lot of people want to play the bull side of TLT, BND, AGG, and I get it. I'm going to pass it. I am a chartist, but I'm also bright enough to look at the fundamentals around me. I want one guy on my team. His name's Jerry. And if Jerry's going to be on my team, do I want to play the long side of these markets? I don't think so. Oh, I forgot to tell you his last name. It's Powell. Oh, yeah, and he has a title, Fed Chair. And he's not going to lower interest rates. He's going to keep them going until he beats this inflation game without trying to break the economy. But to beat it, do you think TLT wants to go up? I don't think so. I think he wants that market to come down a little bit, if anything. The dollar index, okay, dollar's time for a correction. You do realize this market's been in a bull market since mid-March. It broke out. It's in need of a break. Now, a break doesn't have to be a crash. There's a huge difference. Do I actually think that the dollar's going to give up its leadership role to the likes of the euro and other markets like that? No. The yen's up because of the uncertainty. The Swiss franc's the most interesting of that group. Suddenly, it came alive. And I mean, it came alive in a big way. It had been doing a terrible job against the euro, and suddenly it's really jumped up. So I don't know what's going on there, but that one was an interesting one. And in the FXC, I'm bullish at this point. You'd have to get back under 96.87 to take me out of that camp. I'm not looking for a big move, but it can certainly make a better run here at the wherever the upper Bollinger Band comes in. So I'll be looking at that with both hands and trying to figure out what do I do from there. And that's going to bring me on this to the idea of what I do in the mornings. And it's simple. 5:30 in the morning, I record in the futures markets, 40 charts. And I don't have to rotate them much. There's only 40 big futures chart markets, all right? I'm not interested in trading what's going on in Europe somewhere or something on a rebar exchange in China. Yeah, I'll let somebody else do that. I want to trade the American markets. They're the ones to be in, the place to be, and that's what we want to do. You can trade the ICE exchange. They'll give you some of that flavor with the platinum, the palladium, and the markets they cover, and I cover them, absolutely. And then I roll over at 9 and I'm recording my SPDR ETF. Why? The futures, how many of the different SPDRs and ETFs do you trade based on futures? If you're trading any of the stock indices, that's it. You trade GLD, SLV, COPX, all futures. It's all based on the futures market, nothing else. Futures market, that's it. All right, TLT, AGG, BND, I can go on and on. But then we break away. And now we get into the semiconductors and the other parts of the market that we want to look at. I want to look at ARC. I want to look like I did at Rivian. I want to look like we're doing now at SoFi. So I bring that in, and I do it in a way that's easy to understand and very inexpensive to keep up with. I mean, inexpensive. I want to make it so much of a non-event for you that you say, I got to do it because what has he got? The other thing I do that most people don't do, my traders can write me, and they always do, and they say, Ira, what do you think of this? And I'll take the time out as soon as I get a moment, and I generally make a 30-second to a minute recording, go into the chart, make it, send it to them so they can see the chart, hear my analysis, what am I doing? Tell me you're getting that from somebody else. So do yourself a favor, and me a favor, both of us. Number one, put a thumb up for the YouTube. Tell people you like us. Number two, at this point in time, you can go to our website, look under research, and take a look at how I explain how this all works, or you can just take your cursor, push it up there. That'll take you right there anyways. I'm Ira Epstein. You have yourself a great evening. I'll see you all tomorrow.